Hi, this is Alan from www.tradersebooks.com that you can see on the screen there hopefully, and I'm going to just run through the main features of our second edition of our Advanced Stock Trading System ebook. The new Advanced Stock Trading System has got a number of changes. We've made it 100% mechanical, so we have taken out all of the discretionary elements. These included selecting stocks by fundamental analysis, looking at seasonal trends, and also using spread against the stock market index. We're not recommending that now. Although the system has performed very well, all of those things tended to reduce the number of trades, and without them we still get very good performance, but we get many more trades, and there's no question that that's very important. So we're now recommending just take a group of stocks. In this case we're going to be talking about the top 200 in the Australian stock market, the ASX 200. The things that we've improved in the system are an improved trading stop method, and made a few changes to our bond spread indicator, but essentially the two main indicators are the same. So if you have a look at the screen here, I'll just run through the major features of the new Advanced Stock Trading System that are in the second edition of the ebook. I should mention also in the ebook we've got an important section on money management. We've been able to look at the effect of various parameters on maximum drawdown and things like that, and recommend a kind of risk per trade and how many stocks you should hold and that sort of thing. So basically it operates on a weekly chart. You see it's a weekly chart there. This is a 50 period simple moving average. We've looked at all sorts of methods for determining whether the trend is up, and of course this is a trend following system. We only buy shares, and we only buy them when the trend is up. And we define the trend as if the closing price for the week is above the 50 period moving average, weekly moving average. We buy when, on the open of the next week, when the public activity index, which is a combination of price and volume, is oversold, and when the spread against the appropriate bonds, in this case it's the 3-year bonds in Australia, is also oversold. So we're looking for both of those things to occur, and then we'll get a buy. So let's just go and have a look at how we did with AMP since let's have a look here, since 2000, let's say. Okay, well, we had a trade here. We've got a signal this day. You can see that we're oversold there. So we bought on the open the next day 11.27. 11.27, we went out here on our trailing stop, and the price was approximately 13.30. So what was 11.27 to 13.30? A couple of dollars, not too bad. We're out of the market when the market's on the way down, and then we move along here and we have another trade. So we go from 440 up to 5.8. So I mean, that's a very high percentage return, about 29% I think. And here we start at 646, and we go, this is in 2005, go all the way up to, from 646 up to $8. We have another trade here. We go from 970 to about 988, which is not a great trade. And then we're out of the market. We haven't got back in the market since. We've preserved our capital. So what we're going to do is we're going to have a look at some back testing now, and we're going to we've got the ASX 200 here set up. We're going to back test from the 19th of February 2000 to the 19th of February 2010, and we back test, and we'll have a report and just look at some of the main characteristics of this Advanced Stock Trading System with the second edition. Okay, so the annual percent return, the average annual percent return is 23.6. There are 303 trades, so about 30 a year. 55% of those are winners. And I think a key factor here is the maximum system drawdown is 14%. So at no time do you lose more than 14% of your equity. Now I've taken that data already into Excel and I've plotted the equity curve. Now this is the equity curve. We started with, in this back test, $100,000, and we've gradually climbed up. There's a few little sad spots. These are a number of trades along here. This is Australian dollars, up to around about the 700, mid 700s. And really, during the period when the share market went down, a couple of periods during this stage, the equity curve didn't really suffer that much. So let's just have a look and see what actually happened with the Australian index. There's the Australian index here. Let's just have a look at it from, I'll get rid of that, from the year 2000. Okay, we started off around the 3,000 mark, cruised along there. We went up quite nicely to about 6,600, which more than doubled, and now we're about 50% up. Okay, in all of that time. But with our equity curve, we're seven times our original equity. That's where we are. Okay, so if you're looking to go into funds that try to beat the index and generally don't do as well as the index or only slightly better, then I think you're a lot better with a system like this that you can manage yourself just by analysing the shares in the weekend and entering the trade on the Monday morning. So that's the new advanced stock trading system. Have a look at it on, I'll just get back to the stock I had there, the AMP. Look at it at here we are, www.tradersebooks.com, and have a look at what we've got on that site. I'd like to thank you for your attention. Thank you.